Good afternoon. I'm David Mandy, President of O&M Partners. I want to welcome everyone today to the EMX Royalty Town Hall call. EMX trades on the TSX Venture and the New York Stock Exchange under the symbol EMX. As most of you know, event today is being brought to you by New York-based O&M Partners. We're a marketing communications company. We're in the business of bringing public companies together with investors in real time, both professional and individual investors. We are not commissioned. We are not a broker dealer. We are simply a communications company. We want to answer everyone's call today, answer question today. So please feel free to chat in your questions. You can either use the question pane at GoToWebinar, or you can just email us. We'll try to answer all the questions. Be assured, if we don't get to your question, it will be answered by management in a reasonable amount of time, and we'll be getting back to you. Before we turn to our host today, Dave Cole, we're going to start with our speakers we like to have before we turn to presentations, which gives us a better understanding of the mining from, let's say, the 30,000 feet view. As we know, EMX has 30-some% on base metals, and it's as much of an opportunity, we believe, as precious metals. Here to explain that is mercenary geologist Mickey Fulp. Mickey has been in the business, 35 years. He's done it all. He was an exploration geologist and analyst. On the search for economic deposits, he's been in base metals, precious metals, industrious metals, coal. He's done it all, oil, gas, even water in North and South America. He's been in Europe and Asia. Well known and highly respected in the mining industry and exploration community for his ongoing work as an analyst, writer, and speaker. And I might add, he knows about as much about music as he does mining. On that note, I'm going to turn the call over to Mickey Fulp, the mercenary geologist.
Thanks for the introduction, David. Mickey Fulp, mercenarygeologist.com. Standard disclaimer, I'm not a certified financial analyst. Anything I say here today cannot be construed as investment advice to go long, short, buy, or sell any financial instrument. The supply-demand fundamentals of copper. This is a two-part talk. We will talk about short-term today, part one. This is the spot copper price from the day that Trump was elected president. And you see the immediate bounce up about 20%. Then it kind of goes downhill after he's inaugurated, but then the big rise up of some of his programs came into being. We see a very messy chart in the summer to fall of November 17, but that big rise up in the summer was due to geopolitical intrigue, if you will, with North Korea. The price was quite volatile until the summer of May of 18, when the hedge funds went very short, dropped the price down about 30%, in fact, and we kind of mucked along until last summer, or late spring, let's say, when Trump put the trade tariffs on China. That drove the price down. Price started going up on rumors of a trade deal with China in the fall of 2019, peaked on the day that that was announced at 284 on January 15th, and it's been downhill from there, basically due to the Wuhan flu. So let's take a look at Dr. Copper, the guy who's got a PhD in economics, current condition. It's serious at this stage, although copper is expected to recover, but the question is when. We have great questions right now with world economic health, basically due to a health issue, the Wuhan flu. Right now we have both supply disruption and demand disruption, with mines shutting down and with the world economy essentially shut down right now. Whether that becomes destruction on either end remains to be seen. And that really comes to the fact, I think it's a granted right now consensus that the world is in an economic recession, including the US, because of the shutdowns. You can't shut down world economies the way we've done without putting everybody into a recession. Whether that morphs into a depression, I don't think that's going to happen in the US, but it really depends on how soon we get back to work. Uh, a lot of this, once again, is going to be driven by China, although it's become apparent as we've gone through the last year or so. The world's not nearly as dependent on China as we thought we were. China's recovery requires stimulus that's ongoing right now. And what it requires is what they did before in 2009 after the global economic crisis, or even during it, was massive infrastructure build out. So certainly we will see that in China. The Eurozone, which is with the US about the same size user of copper. The question there is, will it recover or will it collapse? We've already had Britain leave with Brexit a few months ago. So I want to illustrate a bit of what's going on in the short term with the price of copper. This is a 17-year chart of the seasonal price of copper over the course of a year in green. So what we do is we take every year and we normalize the beginning of the year at 0%, and then we compare, we add all those together and we compare those with the month of the year. So in this chart, because trading days vary every year, about every 21 days represents a month of trading. So each of these segments on the x-axis would be about 1 year. So start to finish from 03 to 2019, we've seen about a 15% average yearly rise in the price of copper. And that makes sense because even today with a depressed copper price of about 225, compare that where it started about 71 cents in 2003. And we've also overlain the 2020 price of copper, and you see the usual bit of a rise in January pre-Chinese New Year. Then it got knocked down as it always does during the Chinese New Year, end of January, but that was coincident with the world learning about this flu epidemic that had started in China in November and the seriousness of it. So we dropped like a rocket until the 1st of February. We stabilized about till the first week of March, and then is when it hit big time in Europe and the United States. We reached a low of 208 on March 20th, and copper arguably was very oversold at that point, and it came back, and it's come back pretty strongly. But at 225 copper, no one's excited. Probably the average all-in cost of copper worldwide right now is about 275. So in addition to mines shutting down because of the flu, demand destruction too, we'll see where this goes. Next slide, we want to look at the 5-year copper inventories. And I really only want to look from April of 18, when everybody was short copper and inventories built up, and then they started coming crashing right back down. We reached a low in the fall with about, I'm looking at a chart, about 350,000 tons of copper. That's about 6 days of use. Compare that with close to 900,000 tons in April of 18, which would be about 15 days of world consumption. And then you see over the last month and a half or so, you see the incredible rise in copper inventories as we've had demand destruction from the from the COVID-19 virus. So let's look next at copper mass balance over 60 years. In blue is annual production. You can see how that's risen almost continuously over the past 60 years. And notice the real buildup, the steepening of both the supply curve in blue and the demand curve in red since 2009. As China started their massive build out, we recovered from the global economic recession. And then in green is the balance. So that's the difference on a year-to-year basis between the blue curve and the red curve. And so that's the right side of the y-axis. And so this is the way we look at short-term supply and demand right now. Industrial demand is plummeting, at least temporarily. We'll see how long it lasts. Inventories have skyrocketed over the last couple of months. We expect that to level out some point. But mines, mills, and smelters are shuttered. So you have this significant supply disruption right now. In a word, the usual, or let's say in 3 words, the usual supply chains are completely broken. And it's not only for copper, it's for lots of commodities too, and even medical supplies. So until those supply chains are restored and we have some stability in markets, we really don't know what's going to go on with the copper price. I already mentioned, will we be in excess or deficit this year? Well, we've got supply disruption, we've got some demand disruption. So that's a flip of the coin at this point. And because of that, the near-term copper price is also completely unknown. One thing that's positive, we've seen this rise in copper go from $2.08 to $2.25 this week. And if you look at the forward curve for the first time in about a month and a half or 2 months, it looks like a normal forward curve. It is in contango, and I think that bodes well. At least the speculators are starting to think that we're going to see some stability in the copper market. So how do we play this? Well, I would play it with copper-focused stock. So with the market turmoil right now, lots of near-term unknowns. I think it's too early to buy the integrated mining companies. I would be playing the advanced explorers and developers, specific companies that are on my watch list. I am looking at high-grade deposits in safe geopolitical jurisdictions. In other words, places like the U.S., perhaps Chile. I would not go too far across the ponds, let's say. And I think you want to look at those that have midterm production or are takeover targets for one of the large integrated mining or copper companies. I end a lot of my talks with this caveat. There's lots of frogs out there, so beware of frogs masquerading as princes. Do your own due diligence, careful research. Once again, specific advanced explorers, developers with high-grade deposits in safe geopolitical jurisdictions with production in the midterm or takeover targets. I run a free subscription newsletter. All you got to do to get my stock picks is sign up and give us a name and an email address. You can fake your name. We don't really care, but you got to give us a working email address. And finally, once again, I can be reached. Contact at mercenarygeologist.com is email. 51,220 followers at Mercenary Geo, and you can join about 7,400 other subscribers and get my stock picks timely. And the best thing about it, the price is right. It's free. Thank you very much.
Thanks very much, Mickey. Appreciate your introduction. And now we're going to turn to our host, Dave Cole. Dave is the president. He's the chief executive officer and director of EMX. Dave spent his 10,000 hours working internationally for Newmont. Dave is a team builder. He's known for putting together all-star teams with the best minds in the business to execute EMX's unique business model. He brings together different worlds, from hands-on regional knowledge of prospective mineral rights to how this fits in with macro trends in the mining business. So on that note, it's a pleasure to turn the call over to Dave.
Hi, how's it going? Dave, can you hear me? Just to make sure we've got everything going right here.
You sound great, Dave.
Show my screen. All right. We have had some peculiar internet variability today. I'm not sure exactly why. Can you see the screen and everything, Dave?
Yeah, Dave, but could you turn on your web camera? The screen looks good. Your audio sounds great.
I never turned the web camera off. So, there we go. Web camera. Share my webcam.
There you go. Perfect.
Yeah, sorry about that. Not sure what happened. Like I said, things have been working a little bit differently today than normal. And get that off the side so I can still see the screen that you guys can see, I believe. And yeah, so it's great to hear what Mickey has to say. Is the screen moving forward for you guys? Just making sure.
It is, yes.
It is. You're good,
moving
Dave.
forward.
You're good, and you look clear, and your voice is clear. We're ready to hear you.
Rock and roll. Thank you very much. So, always great to hear what Mickey Fulp has to say. Great to see you online, Mickey. EMX is exceptionally well positioned to take advantage of the current macro environment. I just wanted to go in and speak a little bit about how we're seeing the current macro environment. Certainly, it looks as though the fundamentals for gold are strong, and we're seeing that reaction in the marketplace. We saw gold move up in anticipation of there being issues related to COVID as knowledge of that advanced. And then we saw during the liquidity crisis that occurred as the fecal matter hit the rotating blades, that everything sold off, including gold. That's a pattern that we've seen before, as a pattern that we saw during the global financial crisis. And then as the QE is implemented and announced, and in this case, $6 trillion and counting of money dropping from helicopters across the United States, as people start to realize what the implications are for that, then the price of precious metals have started to react, and we've seen good moves in the price of gold over the last few days. We believe that those are likely to stay strong and continue to improve. We're in a situation where real interest rates are negative, and that incentivizes people to not own bonds, and they're looking for other places to store their money. These record stimuluses without tax increases are not good for the value of the currency and can create a debase of fiat currencies across the planet. We believe there's lots of upside left, and gold is still cheap versus the money supply, and that portfolios across the board, particularly in the United States, are underallocated gold, with many young portfolio managers having their clients in 0% gold and only 1% average across the planet. So there's lots of room for upside there. With respect to the gold miners, they're in a situation right now where improving gold prices and very low oil prices puts them in a situation where they can make a lot of money. And we're seeing the profitability of the production companies doing better and better, and that's a leading indicator for where we are going. Oh, there we go. Okay. So here's a couple of charts just to clue in on real quick. These are things that we're all familiar with, but the dramatic increase in the budget deficit that has occurred here is eye-shocking. We're entering uncharted territory. Never seen anything like that in world history. If you look at the Fed printing with the M2 money supply on the right-hand side. You can see in the far right-hand side of that chart the largest increase in M2 ever in history. So if we look at U.S. gold reserves versus the monetary base, we can see a divergence. All of these things are bullish for precious metals. So let's go in and talk about EMX Royalty Corporation, what we do, and how we've built our asset base across the world. If you've heard me talk before, there'll be a little bit of replication in here, but I definitely have some information coming with respect to current advancements of the portfolio. Very quickly, we're royalty generators. We coined the term royalty generation. That is the manifestation of generating royalties through the prospect generation business model, where we acquire large tracts of prospective mineral rights around the world, add value by building economic geologic databases, selling those on for a combination of cash in the ground, work commitments, stage gate payments, and always a royalty on the back end. And that's put us in a situation where we have over 100 mineral properties in the world, I think close to 80 royalties now on the planet, and has built this baseline value of mineral rights exposure and with a focus on royalties around the planet in some of the world's most prospective mineral belts. We also buy existing royalties to augment that portfolio, and we also take equity stakes and make strategic investments. And we have a very strong history of return on capital through our strategic investing, over 40% internal rate of return on invested capital throughout our history of the company after tax. And that's put us in a situation where we have lots of money in the bank. We have roughly $60 million US in the bank and no debt. And we're ready to take advantage of squeezed capital markets to be able to augment our portfolio. And we have a team in place to continue to look for more royalty acquisitions and strategic investments to take advantage of the current situation. Just a quick comment with respect to Mickey's astute highlighting of the copper market. We are short-term quite bearish about where copper is headed, but we're long-term and medium-term very bullish. And so our intent is to buy the dip and become even more exposed to copper on down the road. But we love copper and gold. Those are our two favorite commodities, and there's excellent diversification between the two. It's interesting, the two commodities commonly occur in similar geological environments, so there's also synergies with respect to where we apply our geological talent around the world to be able to be exposed to both of those commodities. This is our global map here, which shows where our assets around the world. You can see the gold assets concentrated in such areas of the western United States and Nevada, where we have some key assets, including the producing mine at Rawhide and the producing royalty operated by Barrick and Nevada Gold Mines on the Carlin Trend at Leeville. We have the key royalty asset in the Timok Magmatic Complex. We actually have a portfolio of royalties there in the Timok Magmatic Complex being advanced by Xinjiang Mining, and that's one of the most significant advancing copper gold deposits on the planet, and we're sitting there with 0.5% royalty on that. Very, very pleased. That's a company-making asset within our portfolio. We've continued to increase our exposure to polymetallic systems, lead, zinc, silver, plus what we call battery metal systems, nickel, cobalt, plus or minus PGE mineralization, dominantly in Scandinavia. We believe those are very good systems to be exposed to. Executing our business model of acquiring prospective mineral rights, adding value, selling them in exchange for cash payments, in-ground work expenditures, and always royalties on the end. Turkey's been a good business unit for us for years, and there are 3 mines being built in Turkey where we have royalties. If we look at these assets in a pyramidal shape where the base are the projects that we've generated organically, and then everything from royalty advancement line forward is being advanced entirely at someone else's expenditure. And that's the leverage of this business model. Someone else is paying to advance all of these assets up towards the peak of production. And as more and more assets bubble up through this at someone else's expenditure to the benefit of our shareholders, that's just fantastic for us as shareholders in EMX Royalty Corporation. And people love to talk about the value of optionality in royalty portfolios. This diagram represents the immense optionality that's embedded in this portfolio, dominantly from discoveries that are funded by our counterparties, but also commodity price optionality. So we're all winning as the price of gold is moving ahead with respect to the wealth of gold assets that we have in the portfolio. We've got strong geographic diversification with an increasing portfolio in Norway. We just bought a portfolio of royalties in Chile. We've had for a long time now a strong presence in Sweden, where we're the second largest mineral rights holder in the country. We continue to expand our footprint in the United States, both on gold systems in Nevada and copper systems in Arizona. We now have over 9,000 mining claims in the western U.S. We love copper and gold, as I said, with respect to our commodity footprint. Happy to acquire other prospective mineral rights as well and leverage that into our portfolio. Delighted to be in a situation right now where over 45% of our portfolio is gold. The bulk of the top line income that we have from paying royalties and paying assets are from gold properties. From an asset class perspective, 56% of our portfolio has been vended off and has a counterparty, so that's being advanced entirely at someone else's expense. And 38% of our portfolio is product that we are developing, new mineral rights that we've acquired, where we're building geologic models and then marketing that to an industry. And despite the COVID situation, we still have had good deal flow. We just announced 3 assets that we sold in Idaho. We think Idaho is a good place to be, excellent geology there, a good gold more than one good gold province in that state for us to focus on. And I think that we'll see additional deal flow emanating from our portfolio in the western United States. Probably at this point in time, mostly focused on precious metals, but there are other opportunities as well. Okay, so the amount of stock that's controlled by management, directors, employees continues to increase a little bit. There's been a lot of insider buying on behalf of myself. I just bought another roughly 50,000 shares in the downturn associated with the COVID liquidity event. I've been buying for 7 years now without having sold any shares, exercising my options, holding the shares, exercising the share grants that come, and paying the tax and holding those shares, in addition to substantial market purchases. And it just shows, what I think of the company. I'm putting my money where my mouth is and have been for years. Paul Stevens, a huge fan of this business model, early shareholder in Franco, Nevada, and strong supporter of EMX for years now, is our largest individual shareholder. Happy to have Newmont Mining Corporation in here with close to 6%, and Sprott and Sprott Global and Rick Rule have been supporters of the company from the very beginning. If you include all of their retail client base, the amount of stock that they hold is a substantial double-digit number. Shares outstanding, 82 million, 83 million approximately. A few options and some restricted share units out there with 90 million shares fully diluted after having been in business for 17 years. We're sitting here in Canadian dollars with $69 million in cash and $75 million in total working capital, no debt. So just to highlight some of the recent things, I mentioned the strategic investment gains. That was at the end of 2018, where we booked $69 million from that sale. That was a great event for us, and puts us in a situation where we have lots of cash in the bank. We've executed a few deals with some of those monies, but the bulk of those monies we still have, and that turned out to be good timing, as we've been very reluctant to invest only when we see incredibly interesting opportunities. And now we're in a situation with a distinct market pullback, and we're strong in cash in the bank. So we'll see a lot of opportunities being shown to us right and left. Leeville continues to pay, and Barrick has highlighted the exploration success within our royalty footprint. We're excited about that. Lots of recent deal flow here. The royalty that we acquired over the Palladium 1 property in Finland is something that I'm distinctly interested. That was quite inexpensive. Sold a few projects in Idaho, as I mentioned, to Gold Lion. Acquired 18 royalties, building a royalty portfolio in Chile inexpensively from Ravello Resources. That was a great deal. very happy to have our strategic investment in Encero Solutions, an environmental company, where the goal of that is to join forces and acquire environmentally compromised assets in Western US and Western Canada, solve the environmental problems, and unlock the potential for the gold mineralization on those properties. And we're excited to advance that. We're 19.9% equity interest holders in Rawhide Mining with the Regent mine now in production, and we're delighted to have the exposure of that new gold mine producing gold. We expect to see dividend income flow coming into us from that operation in the near future. We've got lots of equity holdings in companies, many of which have come to us as payments associated with deals that we have done, in addition to some that we have made where we've invested in them because we believe in what they're doing. An example of us thinking laterally and getting exposed to a big royalty portfolio inexpensively is the deal that we recently did with Corvus and with Millrock, where we bought shares in their company in addition to buying the royalty portfolio that they had in the Pogo area, which is also known as the Good Pasture District. And just within the last week or so, Millrock has announced a very attractive looking drill hole. They announced that it had excellent looking geology with styles of mineralization very similar to Pogo that is on the on our royalty property within the ground that they have joint ventured with the Australian company Resolution Minerals. And that's a great example of optionality built in our portfolio at no cost to us. People are drilling on our royalty ground. We're also large equity holders in Millrock. Their stock is doing quite well. And so we have the chance to win through the stock ownership as well as the royalty. And that comes, I sound like a broken record here, but there's no cost to us. It's always important to point that out. So it just highlights the optionality within the portfolio, as well as the leverage that we have within that portfolio. Another great example is the success that's ongoing in the Taylor area, now being advanced by South 32, and high-grade lead zinc silver mineralization. They're drilling now out onto our property, and we're looking forward to seeing those drill results. This is in southern Arizona. It's a polymetallic system, lead zinc silver. We have an uncapped, unviable 2% royalty. We've been getting payments for years off the Carlin Trend at the Leeville royalty. It's paid us over $13 million since we've owned this. And Barrick, who's now the operator of this via the joint venture called Nevada Gold Mines, have been highlighting the mineralization that's being found, and they can continue to come out with more drill holes with more good results. And you can see some examples of that in this cross section. And they've continued to delineate areas that have mineralization potential and exist into growing reserves and resources, in addition to target areas that they're defining that are in and around our royalty footprint. All great news for us as shareholders in the company that owns the 1% royalty. Here's a slide that shows some shots from the new investment at Rawhide. As I said, the Regent mine, which is the latest mine to be put in production in this district, is the most important thing that's ongoing here. The private company that we own 19.9% of distributes all of their profits. They distribute 50% of them to the LLC holders, which includes us, on a quarterly basis. And then that which remains at the end of the year is distributed in an annual dividend placement. We're quite pleased to be exposed to this. With rising gold prices, we're even more pleased. And there is a 43-101 compliant resource document and production data document that is being worked on right now. Once that's complete, then we can speak to the investing public with greater clarity with respect to the cash flow that we expect to see from this operation. Recently, we invested in Encero. We gave them money to help them go private, and in exchange for that, we get a 6% coupon paid on that, in addition to double principal invested payback in 6 years, in addition to a 7.5% equity position in the company, in addition to a strategic alliance where we go and look at environmentally compromised assets that have gold and other mineral potential, where we can come in, utilize their expertise to solve the environmental issues, utilize our economic geology expertise to unlock the mineral value and move forward. And the track record that Insero has of doing this is excellent. They're the company that unlocked the value at Keno Hill and for Alexco. And Alexco's done well with that asset, which is now in production as a successful silver mine. We helped take Insero private out of Alexco and now have this relationship with them. And I love the fact that we can win multiple ways here. We can win through the percentage coupon rate that we get on the monies that we invested in Insero, also from the double principal payback, also from the 7.5% equity that we have in a company that's led by very intelligent people, and the strategic alliance that we have. So talk about optionality. This is a great example, and we believe this melts nicely into our business. Probably the biggest near-term catalyst for substantial cash flow coming from a new royalty is this asset that we organically generated many years ago and has been advanced by private Turkish companies, continuing to delineate more lead, zinc, silver mineralization on the Balya property, where we have a 4% uncapped, unviable royalty. This district has now been consolidated with Esan Madencilik, who own a 5,000 ton per day mill, 1 kilometer from the production shaft that exists on our property. This consolidation is very bullish for us. We're very pleased to see this. This will combine a high throughput mill facility with the broad zone of mineralization that exists, and that can only be good for the royalty holder. We're expecting to see multi-million-dollar cash flow coming from this royalty within the next 1 to 2 years with good long-term life of project. The biggest way to make money for our shareholders with respect to the optionality that's embedded in our portfolio is when big discoveries are made. There's a huge discovery that's been made, one of the largest ongoing discovery and now development projects in the world in the copper and gold space at the Çukurova Peki deposit on the Brestovac license. Many people know this as the Timok project, formerly advanced by Reservoir Minerals. It's now in the hands of Xinjiang Mining, who have signed a multi-$100 million memorandum of understanding with the Serbian government to invest monies in development of the project and have this in production late in 2021 and into 2022. Initially, they're going to produce from the upper high-grade zone, what's called the upper zone, and then over time develop the underground infrastructure to put the huge lower zone into production. We're talking over 1 billion tons of over 1% copper equivalent. This is a gargantuan metal system, and we're sitting here with a 0.5% royalty. This is a company-making asset embedded in our portfolio. So, strategic investment gains. Royalty generation business model has been proven to work for 17 years. Track record of acquiring additional royalties to augment our portfolio with an increasing amount of cash flow as we look forward throughout our portfolio. And that puts us in a situation where I think we can take very strong advantage of the current situation that we have in the world with rising precious metal prices, but also as the recovery occurs and we see a return to base metal demand increase, the future looks bright for us. I'm more than happy to answer any questions.
All right, thank you, Dave. I also forgot to introduce Scott Close, who's Director of Investor Relations. A good person to follow up with if you have questions after the call. We're going to start with Mike Hahn. Great to have Mike on the call. Mike, questions today for Dave?
David, Mike said that he's on the phone and would have to write in his question if he had one, and thus far we have not received one. If it comes in, I will let you know.
Yeah, we can answer it in a minute, no problem.
Sounds good. Let's turn to John Burke. John, question today?
I'm right as we speak. I'm doing the quarterly reports, and I just got done your report, and oh shit, I looked at the year, your performance this year, and you're just like even with or slightly above maybe what the market's done on the downside. but it's PNB or CNB dragging you down. Now I put a hedge in there to protect that, but that didn't kick in because what happened is that hedge went down a lot as CNB went back up to 30 some odd, and just a month or two ago it was at 30. It's 16. It's 16 now. Yeah. And
John?
by the way,
John,
well, we'll talk about once I
think maybe John was on the other line.
Yeah, exactly. Okay, thank you. Let's turn to Jeffrey Masseri. Jeff, for a good question.
Jeff, you're muted.
Okay, we'll go to Heinz Thoma. Heinz, someone want to start it off for us today?
I'm unmuted now.
David, great update. Can you give us a little bit of color as to what your actual royalty incomes are at the moment, the revenues are? Just to give us an idea, and how you see this develop over the next couple of years, as you said that some of the projects are coming up for production.
So I get asked this question often, and I wish I could answer it in detail. We have a very solid understanding of what we think future royalty income flow looks like, and I can tell you that from the projects that have published 43-101 reserve documents, we can talk about that, such as the upper zone in the Timok Magmatic Complex. Once that is in production at metal prices close to today's metal prices, we would expect to see about $2.5 million per annum from that. Of course, the royalty would expand dramatically beyond that by a factor of 5 or more once they go into the lower zone, but there's not a reserve document that defines a production profile or bankable feasibility study, so I'm not legally allowed to talk about that. So we always have to be careful about what we say in a public setting. Likewise, with respect to Balya, I can point out that the mill is 5,000 tons per day, that they average the head grade there at about 8% combined lead zinc plus an 80 gram per ton silver credit, and we expect throughput from our side of the line to be roughly 50%, say it's 40% to be conservative, and you can do the math, and it's multiple millions of dollars per year, but I'm not allowed to specifically give the amount of money that we expect to come from that asset because it's not 43-101 compliant, and because it's a private Turkish company that doesn't have to produce a 43-101 document. So I'm happy to try and put the pieces together for the investing public so they understand where we're headed. And of course, we can talk about the monies that we receive on an annual basis, which is in our financials, including the money from Leeville and the pre-production royalty payments that we get off of many of our royalties that we have within our portfolio. I believe we have 33 royalties in the portfolio that are paying. However, the bulk of those are fairly small payments that are pre-production payments. Oftentimes when we sell our projects, we have an annual advance minimum royalty payment tied with that, so that we have some income coming in whilst the project is being advanced. And of course, the big money pays once those bubble up to the top of the pyramid and start to really cash flow. So I can't give you much more specifics than that, but I appreciate the question. I get asked often.
Okay, thank you.
Thank you, Heinz. We'll now turn to Jeff Masseri.
Hi. Thank you. Good presentation, and I just wanted to ask 2 quick questions. The first one is a general question, which is you mentioned that you were involved indirectly with the Keno project, and at some point when the price of silver got to a certain price, got too low, the Keno project had to close down and the royalties stopped. So I'm curious to know, how do you get around that kind of problem? And the second question is, you are involved with a Turkish company and a Chinese company, all in the same project. How do you ensure, number one, that they do get into production, and number two, that you get paid?
Okay, so let me just correct a few things because there's a couple of nuances there. I don't know if I say them incorrectly. We have no interest in Keno Hill and have never had any interest in Keno Hill. Mm-hmm. It's the environmental company that we have invested in that unlocked the mineral value of Keno Hill for Alexco, and that's an example of their expertise on the environmental side. And so we're leveraging our economic geologic talent base with their environmental talent base to look for other districts to do that in the world. We have no interest in the Keno Hill mine. Just make sure everyone.
No, I understood that, but I was asking the question about what happens if the prices of metals go down, or if some other aspect occurs and you get stuck.
So metals go up, metals go down. When they go down, we're in a tougher market. When they go up, we're in a great market. That's just the nature of being in the mining business. But I will say that when you hold royalties, you have much less risk exposure because you're not the one paying to advance those assets. But we're all subject to the cyclicity of this interesting sector of the market. There's no doubt about that. And of course, if companies want to, they can hedge. Generally speaking, the investor public prefers unhedged companies. EMX does not have any hedges in place.
Thank you.
With respect to your second question, and that was with respect to, you said a Turkish and a Chinese company involved in the same project.
Yes.
We have no project exposure where a Turkish and a Chinese company are working together. Those are two separate projects. One, I believe I mentioned the Balya project, which is operated by Eson Madencilik in Turkey. That's 100% owned by Eson. We're subject to our 4% uncapped, unviable royalty. And Eson is a company with many producing assets across Turkey. They've got an excellent reputation. We've got really good communication with them. And how do we umpire that relationship and that royalty is that we have a right to actually put a professional on ground with an office on site. And as they are developing the mine, we are doing that. And we will have a professional on site to be able to make sure that the sampling and the umpire assaying and all that is done appropriately. And Eson's been good to work with. We don't expect any problems there. With respect to Xinjiang, the Chinese company, which is advancing the Timok project in Serbia, that's all being advanced under a memorandum of understanding with the Serbian government. And of course, that's a member, it's an EU country. The royalty is enforceable through the contract that exists when we sold the project to the predecessor company. And if that was ever disputed, it's enforceable by British Columbian law. So it's no different a situation than it is with any royalties. I'm not sure if that answers your question, but just wanted to clarify that. Yeah.
Thanks,
If you
Jeff.
want to ask any other questions around that, I'm happy to answer them.
Thank you, Jeff. We'll turn to Doug Loud.
Afternoon. It was a very interesting presentation, but I'm not clear on, are you a capital asset selling company, a dividend company, a receiving royalties company, all of the above? You're making lots of money very nicely, but when you look at yourselves, how do you see yourselves on that spectrum of ways you're earning money?
So we acquire, let's go through the business model and answer your question for you, and thank you for the question. We acquire prospective mineral rights around the world, add value, sell those projects, and keep royalties. And so we sell 100% project equity subject to the royalty and other commercial terms that are associated with the deals that we do. We also buy existing royalties, and we also make strategic investments and then sell those profitably over time and book those monies, excuse me. So we receive payments, pre-production payments, we receive royalty payments, we receive stage gate payments, we make money off stock that companies give us associated with the deals that we execute, and we build that pyramid of assets around the world which are being advanced with other people's money upward, creating that optionality and leverage within our portfolio. And you asked if we're a dividend company, and the answer is no, not yet. But absolutely, we will become one. And our intent is to start to pay a dividend once we have increased cash flow coming from projects such as the Timok project in Serbia and the Balya project in Turkey, and additional dividends coming from the Rawhide investment, in addition to the ones that are already cash flowing. Does that answer your question?
Yes, that's very interesting. Thank you.
Yeah, you're welcome. Thank you for the question.
Thanks, Doug. We're going to turn to Steve Magruder. Steve, do you have a question today?
People are there.
Yeah, we're here. Good to have you on the call, Steve.
Sorry,
I said it's good to have you on the call. Do you have a question for Dave today?
I'm sorry.
I said, do you have a question today, Steve, for Dave?
I have two simple questions. How many people are at the company?
Yes. So we have a lot of consultants that we utilize around the world, but that help us out from time to time. We also have seasonal workers that come in and help us during the field seasons in different parts of the world, but in a core group of a little over 20.
And how many deals do you try to look at a month?
So yeah, there's two different types of deals that we do. One is where we are acquiring mineral rights and then selling those projects. And the deal flow that we've had from that over the course of the last few years has been fabulous. We've been selling between 15 and 18 projects per year for the last few years, which is probably the very highest of any prospect generator or royalty generator business model out there in the public space. And then the other types of deals that we do is look at opportunities that people are showing us where we can buy royalties from other folks. And there's a big long list of opportunities that we're cranking through with our due diligence team. The members of our due diligence team include metallurgists, engineers, finance professionals, and economic geologists. And we have a fail fast mentality because we're shown so many different opportunities that we try and quickly do smell tests on them and see if there's any deal killers up right away, so we don't waste our time on too many of those, and we can get them out the door and focus on the ones that look good to us. And feel free to review our press releases and look at the deals that we have executed on.
The proof is in the numbers. Your profitability is outstanding.
I'm sorry, say that again, please.
The proof is in your numbers. So profitability is outstanding. Return on capital.
Thank you.
I do have one question that's from left field.
Yes, sir.
Have you looked at Great Bear Resources?
Yeah,
have you seen that they're proposing that shareholders get a 2% NSR?
I'm happy to look into that. And someone else mentioned Great Bear to me a couple of days ago. We're happy to take a look at that.
We're all interested in what the value of that NSR is because it will go to existing shareholders. So that's roughly the territory.
Oh, fascinating. Okay. I'm not familiar with that announcement, but we'll look into it.
Thank you, Stephen. Scott, questions today from the audience that we would like to ask?
Yeah, we have a few. I did want to mention that Mickey Fulp is here, and he typed in his question, but I think maybe I can get him to ask it live. 1 second. Mickey, are you there?
Yes, I am. Can you hear me?
We can. Thank you.
Okay, Dave, my question is, it's kind of to the point. With this significant cash flow, when can shareholders expect a dividend from EMX royalties?
Yeah, we'd like to institute a dividend. Mickey, great question. I get asked this often. And let's just go back a little bit and talk about the big win we had in Russia. We put a lot of money into our treasury, but on a recurring cash flow basis, from recurring royalty income, we're not cash flow positive. We're certainly hugely cash flow positive because of the big wins that we've had. And we've discussed the strategy of that with our large shareholders and at the board extensively. We've made the decision not to pay a special dividend, but rather reallocate those monies across the sector doing what we do well. And astute allocation of capital is job number one around here. But we definitely do want to institute a dividend once we have recurring income from royalty income flow that puts us distinctly positive cash flow on an annual basis. We expect that to happen in 2021 to 2022 timeframe due to the royalties that I just mentioned. And there's always the potential for us to buy existing cash flowing royalties. We're looking at many of them all the time. Although, as you know, Mickey, royalties sell at a premium price, and we have a high filter. So I can't promise that we'll buy any significant cash flowing royalties because we're not always willing to pay what people are, our competitors are willing to pay. but that possibility does exist. We're always looking for value, and I expect to become a dividend a company that gives dividends to our shareholders in the near future.
Thank you.
Thank you.
And I did get a write-in question from Mike Hahn. The question is, if you were to sell the Timok stream, how, jumped on me. How would it be valued? Secondly, on recent calls, you have said that you might buy more streams that are already paying. However, companies in the space have said that royalties trading at 0% discount rate. It seems like there isn't value in working on streams anymore. Are you still thinking about doing this?
Yeah, so I'm not sure I fully understand that, but let me just correct one thing real quick. A lot of people confuse the term in the industry stream and the term royalty. A stream and a royalty are similar financial instruments, but they're not the same. We own no streams in the portfolio, and the royalty that we have on the Timok project is a royalty, not a stream. Streams usually have a strike price that pay X dollars per ounce of silver, for example. That's below the current silver price in most cases. And that's not the case with our royalty there. That's a gross royalty. So there's some similarities between the two financial instruments, but royalties are distinct. So that's one point I want to make. And then I'm not sure I get the full gist of the question from that point forward, but
well,
yes,
he just actually chatted in that you answered his question perfectly. So I think you covered it.
All right,
thank you very much.
Yeah.
I have one also here. How much cash has been spent since year end?
So that would be in the first quarter. So that'll be announced as soon as the quarter is announced. I don't think we're allowed to say that in advance.
You're not. You're not, Dave. No, definitely.
I don't think so. So I'm not allowed to say that in advance, but it would be right in line with our expenditures as we're spending money to expand our portfolio. It won't be substantially different than past quarters.
Okay. I have another one as well if there's time. How much of the 69, and this may be the same question as the previous one, but how much of the 69 million have you spent on assets? Are you potentially looking at large acquisition or smaller ones? And what is the G&A exploration sourcing assets?
Yeah, so we've already spent a little bit of money from the projects that we've acquired and the royalties that we've acquired as per the announcements. And what we've done so far is a small and medium-sized deals. We're not driven by the need to do more small deals or to do a really big deal. We're driven by astute allocation of capital. I would love it if we find a way to allocate $20, $30, $40 million into a great transaction. But if we find a number of $3, $4, $5 million deals that are great transactions, we'll continue to do those. And the important thing is that the capital is allocated astutely, and we're most focused on cash flowing royalties and cash flowing strategic investments. I hope that answers the question sufficiently.
I think so. I have another one that is in regard to Timok. How do we value it? What would the NPV 5% be on Timok?
Yeah. So the way to value that is to pull up the reserve document that is a 43-101 compliant document that was filed, and to look at the resources. And then you can see the production profile for the upper zone, which is a small high-grade zone. That actual reserve profile was made public by the previous owner. And then you can extrapolate and look at the lower zone. You can take into account some metallurgical loss. You can take into account resource to reserve recovery. You can also possibly take into account the exploration upside, because I believe there's a dozen drill rigs turning on the property, continuing to expand the resource. So there's a lot of different variables that need to be taken into account. I'm not allowed to tell you how the math of all that pans out, but it's a big number because, of course, we've done that math. But you can get a hold of, you can do the math. It's not that hard yourself by looking at the tons and grade and figure that, maybe 90% resource to reserve conversion, maybe the deposit grows by another 20%, maybe there's a 90% metallurgical recovery, maybe the smelter pays about 85 or 90% of the metal after smelter charges, and we get a 0.5% royalty. I mean, you can do the math on that, figure out what that is. and come up with the NPV0 or cumulative cash flow. And then you can discount that any way that you wish based upon what you think the production profile from the mine might be. Somebody made a comment earlier that producing royalties, particularly gold royalties, we see trade near NPV0, which is astonishing. And people ask, well, why in the world would you pay NPV0 for a cash flowing asset? And the answer is, as astutely worded by folks like David Hartwell, the CEO of Franco-Nevada, is because of the embedded optionality, specifically discovery optionality, but also the other aspects of optionality. As mine engineering techniques are advanced, that expands the reserve that is economically viable. That's an optionality to the royalty holder. As metallurgical techniques are improved and they recover more of the metal, there's additional upside exposure. So all these things work to the royalty holder at no cost to the royalty holder. The biggest one is discovery, of course.
Great. And I have one more question, but first I do believe we may have John Tomazos on the phone. John, are you there?
No, I think he's just listen only, Scott. But
Gotcha.
have gotten to
A lot of
Greg.
respect for him. I'd love to hear what he has to say.
Yeah, he had to get off, but we'll get his question and come back to you. Greg, did we get a whole, did Greg ask his question from Millrock? Did we get Greg's question? He wanted to ask a question since they're close.
I do not have that one here, but I can try to unmute him. In the meantime, let me ask this question while I find Greg. What is the current status of the Bullion Monarch lawsuit?
Yeah, I was wondering if someone was going to ask about that. So we've been in a lawsuit with Barrick over an area of interest that exists on the Carlin Trend that has not been paid. And that lawsuit has been going on for years. It's in the Nevada State Court and the federal court. And there's a lot of information that is publicly available if somebody would like to research that. We've been working diligently on this and are hopeful that we'll have a favorable outcome.
Great, and I found Greg. Let me unmute him. Greg, did you have a question? He's currently muted, so he may not.
Well, I'll just put in a note for Greg. You know, Greg's done a fabulous job of running Millrock. They're a great prospect generator. We're happy to be a large shareholder in that company. And congratulations to him and his team for drilling a good-looking drill hole there in the Goodpasture district.
Yeah, can you hear me now?
Yeah, we can hear you, Greg.
Yeah, I actually didn't have a question, but I would just like to thank Dave and EMX. I'm a shareholder of the company, so are my sons and even my mother. And right now we're all up more than double on our investment that we made a few years ago. And I know it's going to go a lot higher. And I'm glad to hear of everything that you've got going on right now.
Well, thanks so much. You're contributing to that success, but thank you.
Thank you, Greg. And Scott, I think we're conclude the questions at this point. Or
yep, that is all of them. If any more come in, we'll be sure to get them to you guys over at EMX and get answers back to each person.
Well done, Scott. Back to you, David, for closing remarks.
Well, David and Scott, you guys always do a great job. I always appreciate the questions from the field. And I'm here, and Scott Close is here as well to answer questions. In Europe, Isabel Belger is available if the European time zone works better. And for folks, and I appreciate your interest in the company. Feel free to call us up, ask all the hard questions you want. We're here to answer them.
Thank you, Dave. Thank you, Scott and Isabel. All the best to everyone at EMX, and thank everyone for your attendance today and your questions. Wishing you a pleasant evening. Take care.
Take care.